markets, which side of the fence are we headed to? We have Nooresh, Merani as well as Kunal Bothra joining us this morning. Once again, good morning, Kunal as well as Nooresh. Thank you so much for joining us. And Nooresh, let me come to you. The market setup, how is it looking to you at this point in time, given the fact that yesterday we did see some sort of a bounce back, but that also got sold into?
So we continue to see the same pressure which has been there for the last 18 trading sessions. The FI sell-off continues. But yesterday was also another day where we saw more than 5,500 crores being sold. But the market breadth was relatively better. But for now, my view is going forward, it could be the next few sessions where the selling could actually at some point of time stop. We've already seen more than 1.03 lakh crores, almost $12 billion. China has seen a flow of $25 billion. So can't be expecting a lot more than 15-20 from here. So overall, the structure is where we are continuing to drift on the index. The support levels are broken in terms of the 24,800 mark. So that remains a pivot. If we start sustaining above that, we get into a bullish zone. On the lower end, 24,000, 24,200 remains a support, which is the July-August low. So for now, we are still in this range-bound consolidation with a little bit of a pressure across the board on the heavyweights.
Coming in on the market mood right now, Kunal, what do you think? Are we likely to be close to the bottom, or it's too early to call even that?
Too early to call that because I think it's been too much of a pressure for the markets, and it will take a lot of time for the index to try and settle into a trading range. So at least the best what we can expect is that even if the index settles into a trading range, that could probably be a lot more positive for the overall market breadth. Like for example, what we saw yesterday after I think 7 or 8 consecutive days, for the first time we saw the net market breadth for the index, that is advance minus declines, into a positive trade, and I think that was one of the major reasons why in the first half of the market, we saw the bounce not just on the index, but the bounce was felt more towards the overall market breadth in the mid caps and small caps. So I believe that even if we have few more odd days where the net market breadth remains positive and the index, the benchmark indices remain into a consolidation, that would still be considered to be a lot more positive. The only data point which I think one should be looking out for, especially for someone who's looking at options data, is to try and look out for 24,600 and 24,500. These are two critical points where there's been huge amount of call writing. So the moment we start hitting those strikes on the upside, 24,600 for example, and if we manage to break past above those levels, if there is a call unwinding which happens, then I would believe that the pace of rally could intensify. Other than that, I would believe that it could just be a normalization or a stabilization of the index ranges.
Right.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.